Hi everyone, this is Peter Gaday from ManageXValue.com. Have you ever tried to identify and plan risk mitigation investments with an objective of mitigating the most amount of risk for your organization? It's not easy, is it? Unless you have quantitative insights into your risk landscape in a way that helps your business stakeholders to understand what are the most relevant risk events throughout the organization, and also helps your security and risk teams to analyze who the major threat actors are, what are the most important threat actions they can take against the organization, what are the most sensitive attack surfaces, and most importantly, what are the most relevant proactive and reactive capabilities that helps them to mitigate the most amount of risk. In two videos using the ManageXValue platform, I will walk you through the process of identifying and planning risk mitigation investments, and in the second one, evaluating and most importantly, communicating their benefits throughout your organization. If you have any questions or observations related to the process, please leave your comments below. If you like what you see and hear, please press the like button, subscribe, and set your notifications so you don't miss the second part of the video. Thank you. Let's dive right in. So let's discuss how to identify and plan risk mitigation investments. For the purposes of this video, we are going to use a banking environment, a hypothetical banking environment. And what you see here in the current risk analysis dashboard is that it has a pretty significant risk profile. The loss exceedance curve actually highlights that the overall risk for the organization is quite high. And if we compare it to the risk tolerance of what the hypothetical management team defined, you can see that there is a lot of work to do to actually decrease the level of risk for the organization. This is an enterprise risk demo, but a significant portion of the risk landscape focuses on cybersecurity, as you will see in a moment. So let's discuss what's the situation with the organization and how we can identify what the risk mitigation investments could be that could mitigate the highest amount of risk. The very first analysis could potentially be this bubble chart. And what you see here, there are a lot of risk categories at the bottom, and they are very crowded. And it is because there are a couple of black swan type events. So the first one is a war write-off in this example. This bank may be in Europe, and there are, for example, other black swans like a bank run. This bank may be in another part of the globe. So let's eliminate these so we can focus on other non-black swan areas. So in the risk event selection, we can eliminate these two black swan categories, and that way we can really focus on what the major risk categories are. The main categories, as you can see, really relate to the loss of high sensitivity investment client data in various parts of the organization. So the risk event is the same in this case, but the business unit or reporting unit actually is different. There is loss of IP also, loss of consumer client data, and there are also high sensitivity consumer client data loss and a lot of other categories. But we can see that this is probably one of the major focus we can select to mitigate the highest amount of risk. In this chart, the size of the circles show the current level of risk. This is a Monte Carlo simulation based calculation, so we focus right now, what we see here is the expected or average risk level for these, but of course focusing on the maximum or the minimum is also possible, but for the purposes of making some decisions, let's focus now on the expected case and simplify the decisions. So we defined that one of the main focus could be the loss of high sensitivity investment client data risk event or the consumer data risk event. So we can validate that assumption with these candle charts. These candle charts really show the ranking of the various risks across the various dimensions of the model. And from a risk event perspective, this validates that the high sensitivity investment client data is the most significant one. And after that, there is high sensitivity consumer client data loss. You can interpret these candles as if they were upside view of the distribution curves of these type of Monte Carlo simulation results. So the wider part of the candle shows the 5th and 95th percentile, depending on the settings there are in this analysis. And then the narrow parts of the candle essentially show the minimum and maximum. So we can see that for the high sensitivity investment client data, there is a relatively long tail risk also incorporated. Now, in this analysis, we can also immediately see another factor that from attack surfaces perspective, the service provider APIs probably have or cause the most amount of risk for the organization. And from a threats perspective, malwares are the highest risks categories. This suggests from this analysis that probably one of the main focus area could be cybersecurity, focusing on malware and service provider APIs. But let's take a look at it and validate from another angle. So when we focus on the risk hierarchy, you can see the same amount of risk, but now distributed across the various dimensions. So the very first dimension is the organization unit. As you can see, this is a pretty simplified bank structure with some digital banking operations and physical banking operations with a couple of regions and a few branches within each region. There's investment banking and consumer banking operations also. From risk events perspective, that's a little bit more robust because there are risk events that really result in the loss of money for the organization. There are risk events that result in loss of client data or integrity problems for the client data. There are service disruption related risk events and other enterprise risks, but most of the risks really here, as we can see, a significant portion of the risks focus on the client data events. From impact perspective, that's not necessarily important from our perspective for this analysis, but what you see here is direct financial impact and non-financial impact categories. What is more important for the purposes of our analysis to identify what we should focus on is the threats view. So you can see that there are physical security threats and IT security threats and other areas also, or other threats as well. But really the main portion, almost all of the risk comes from IT security threats. And within that, actually, most of the risk comes from malware and phishing campaigns. So this already highlights that this is probably one of the main focus we should have. Then from an attack surface perspective, you can see the physical infrastructure of the organization, what could be targeted by various threats. The digital infrastructure, which as you can see, covers most of the risks for the organization. So again, we should probably start focusing on the digital infrastructure. And within the digital infrastructure, we can also see here, as well as similar to the candle chart analysis, that the service provider API is the most significant factor. So considering this type of analysis, let's really start focusing on these categories that we defined. So let's start focusing on the malware and then probably the service provider APIs. Once we go back, you can see that a lot of areas became zeros, so eliminate those. That's what's not important for the purposes of the analysis. Obviously, from an attack surface perspective, now we only have the service provider APIs. From threats perspective, only focus on malwares. From impact areas perspective, there is still a lot of impact. And then from risk events perspective, this hierarchy suggests that there are a lot of potential risk events that could be generated by malware coming through the service provider APIs. To some extent, this is cybersecurity. From another perspective, this could be considered as a third-party risk for the organization itself. But let's understand better what really drives this result that malware through the service provider APIs is really important. So you can see here how connected everything is, who can potentially target the service provider APIs with malware, what are the proactive capabilities that can mitigate this type of threats, what are the potential risk events in various reporting units, what is the potential impact, what are the reactive capabilities that can mitigate those, and ultimately we end up with the residual risk or residual impact, if you like. And another very important factor really is around understanding what drives the risk itself. So when we focus on the risk inventory, there are 126 scenarios out of 1,000 in this analysis that focus on the risk coming from malware targeting the service provider APIs. And what I highlight here is that the organization can see that there are a lot of relevant proactive capabilities, but the strengths of these capabilities are often low in this attack surface. So this here shows the strengths of the threat itself, and then if the strength of the proactive capabilities are this low, then they cannot really protect the organization against this type of threat. So objective of an investment is always to increase the strengths of the capabilities. From a proactive perspective, increase the strengths across various attack surfaces, and from reactive capability perspective, increase the strengths in organization units. You can also see that there are reactive capabilities that have actually zero strengths in this hypothetical model, even though there are a lot of relevant reactive capabilities. And then from an enterprise risk perspective, what's important is that this risk itself is already pretty significant. This is only a slice of the enterprise risk. Even if we compare it to the risk tolerance, and if this was the only risk for the organization, we would still have work to do. Obviously, you don't want to compare risk tolerance to a segment of your risk profile or risk landscape, because risk tolerance is an enterprise level concept. So that can actually be compared to the enterprise level risk or the enterprise loss exceedance curve that you can see here, relative to which the malware service provider API risk is still significant. Actually, a significant portion of the total enterprise risk relates to what we are targeting now with the malware on service provider APIs. So we now define that the main focus we should have relates to service provider APIs and manage malwares. So when we look at the potential investments, for the interest of time, investments here are already filled in. But let's focus on defining an investment that focuses on the third-party API security program against malware. So this could, in this case, could potentially belong to the CISO, even though it could be considered as a third-party risk. So when an investment is defined or planned, you can see that it's very important to really describe what needs to be done, who the owner is, whether it's mandatory or not, whether there are predecessors or there are connections or dependencies between investments. This type of detail is for another video, focusing on portfolio prioritization when you have to deal with risk mitigation investments. And obviously the most important is to understand what the resource requirements are. In this case, cost to execute or to implement, and then the cost to operate across the useful life of the investment itself. And then from technical hours perspective, how many hours are required to execute and maintain. Then another important factor is, as I described earlier, the goal of any investment is to increase the strengths of capabilities, protective capabilities for the organization unit, which relatively simplifies the tasks and the objective of how we define an investment. But at the same time, for a larger organization with a significant risk profile or risk landscape or risk web, how we call it, you can see that there can be significant number of proactive capability attack surface combinations. In this case, there are 2,205 of those already that could be improved to some extent. But we already defined that from a threat perspective, we will focus on malware. So now we just filter down to those attack surfaces and capabilities that can be targeted by or that can be relevant against malware. And we also defined already in the previous analysis that we will focus on service provider APIs. What you see here really is that the assumption for this investment is that whenever there are lower level of capabilities or strengths for the capabilities, we will improve those to a higher level. For simplicity perspective or purposes, let's just focus on what has been changed. So right now there are 19 capabilities on this specific attack surface that are improved. So when we make an assumption around the benefits of the investments if executed properly or as planned, what you see here is really an understanding that the current strengths of the capability on this attack surface is illustrated with the blue line or curve, while the new strength is illustrated with this orange curve. In terms of assumptions for how valuable the investment or impactful the investment is, uncertainty is also relevant in this case because we don't know the future. But you can define to what extent you think the investment would improve the capability and how certain we are in this improvement. So once that's done for each and every one of the capabilities that the investment would specifically target, all these assumptions can be done. Now, in a real example, you would definitely want to describe specifically what activities would be done by the investment to achieve this type of improvement. So in the investment actions, you describe that. Those type of activities should also drive the resource constraints requirements or the resource requirements of the investment itself. So those are related. So this is definitely a proactive investment in nature. From a reactive perspective, we can check that there are no reactive capability improvements planned here. So this is the part of planning and identifying and planning the investments. In the next video, we will focus on how to evaluate the risk mitigation investments. As you can see here in this example, this is a pretty high return investment. It has a significant return, but in the next video we will focus on how to evaluate the benefits. Thank you very much.